Hi everyone. We are going to get started by reviewing what double entry accounting means. So, going back to our last lesson, remember that when transactions occur, we need to make changes in the accounts. And for each transaction, all the changes made together must balance. So, if I am looking at a transaction, I need to make sure that my debits are equaling my credits. And this is what we refer to as double entry accounting. Now, we have looked at the ledger and we've looked at how to add the transactions and the changes into our accounts within that ledger, but now we're going to learn how to calculate that balance of an account. So step one is to add the two sides of the account separately. So this means that we are finding the two subtotals, so the subtotal on the debit side and the subtotal on the credit side. We can refer to these as pin totals or pencil footings. Okay, so once we have those two pin totals, we can then look at which number is greater and subtract the smaller total from the larger total. Once we have that number, we can record the amount beneath the larger subtotal or the larger pin total, and we're going to circle that final amount. So that will be our ending balance. Here's an example for you. So with cash, we have a beginning balance of $3,265. And as we can see, the transactions have occurred. Now, a problem with this example is the transactions are not numbered. So we want to make sure that we are numbering and putting the number beside each transaction to show which transaction it comes from in case there's an issue and we can go back to our list. Once I have all of my transactions recorded, I can then add my debit side, add my credit side, and find my two pin totals. So here I have a debit of $3,865 and another pin total of $3,650. Well, because my debit side is greater than my credit side, I'm going to subtract the smaller number from the bigger number, and I will get a total of 215. Okay, now this is going to show that this is my ending balance, and because that is my ending balance, I'm going to circle the amount. The same thing is happening in the accounts payable section, except it's the opposite. So because accounts payable are liabilities, it is a credit. It starts with the beginning credit balance. To show an increase of a liability, we are adding that to the credit side, and to show a decrease in the liability, we put it on the debit side. So just like cash, except opposite. So assets and liabilities, they are opposite for how they increase or decrease the debit and credit side. So in this case, we have a beginning balance of $620. Once all of our transactions have been recorded, we can find our pin totals. So I have 970 on the credit side and 200 on the debit side. So my ending balance for accounts payable is 770. Now this makes sense that our beginning balance and our ending balance are recorded on the same side, same with cash. Now, sometimes this isn't the case. So we call these exceptional balances. And I'll give you an example for what that could look like. So for example, suppose that Jack Evans, a customer, owes us $50. Suppose also that he sends a check for $55 in payment. His account will end up with a credit balance of $5, even though he is a customer and normally has a debit balance. The account balance is correct. It just shows that the business owes Jack Evans $5. This amount, this liability will be temporary. Okay, so it will be temporary. We need to make sure that is fixed after, a short period of time. Another example for when this could happen is with a bank account having overdraft protection. So if you are someone who has good credit, you might have a personal bank account where you are able to go over your bank balance. So maybe you owe $100 for your phone bill, but you only have $90 in your bank account. Well, if the money is being taken out of that account for that bill, if you have overdraft, you will be able to go over your bank balance by a certain amount. So in this case, it would be $10. Now, if that is the case, if you are in the negatives for your bank balance, you have only a certain amount of time to make it a debit again. So it gives customers, it gives businesses a little bit of protection there so that, if they only had $90 in their bank account and a phone bill comes over $100, instead of being charged an NSF, non-sufficient fund charge, the overdraft protection would help them. But if you are going over your bank balance, you are then seeing a liability. So your bank account is almost like a credit card at that point, and you have to pay that money back. Okay. Now, um, here's another example of an account. So we have accounts payable. In this case, this is Staples. So we have our transaction number 3, our transaction number 5. There was no beginning balance on the balance sheet. So, I only have 2 transactions here. I have my PIN total of 300, my PIN total of 750, and the difference is 450, and that is my circled amount. So the key here is just to make sure that when you are recording your transactions, you are recording them on the correct side. And if you are finding that your balance at the end looks different or is on a different side than your beginning balance, make sure that it's not an exceptional balance, and make sure that you haven't made a mistake somewhere. Because again, with ledgers, and especially if we're doing it by hand, mistakes happen. So always double check and make sure that your accounts are correct.